turning down. Okay, and that will make that second peak the highest peak in the current 40-week cycle. It is still possible. Now, let's compare that to what has been happening in the Australian market. And let me try and show you the same time frame. I beg your pardon, in the American market. Here's the American market, and let's zoom in to get the same sort of time frame. This is the S&P 500. Okay, there I have roughly the same zoom level. You can see the charts are very similar. Okay, and the analysis on these charts is also very similar. And let me point out the similarities first of all. There is a trough of the 18-month cycle at least on the 4th of October 2011, and so the current 40-week cycle has been developing since then. And so let's draw the M shape of the current 40-week cycle. The M shape is drawn from the first trough to the highest peak before the intermediate trough, which is over there, and then it comes up again and forms a second peak, and then it comes down again, and it's headed down to a trough of the 40-week cycle, which is also expected probably sometime in June, July, or August of this year. Okay, now you'll notice some very big differences between the American market and the Australian market. And this is the point of today's Trader Chat. I hope you're all still with me, and you've been sort of keeping track of the conversation. What are the two really big differences in what's been unfolding? Well, the Australian market, you will remember, leaped up and formed the first peak of the current 40-week cycle here in October, late October of 2011. The American markets also did leap up, but that peak that they formed there was only a peak of the 80-day cycle, okay, because that level was exceeded in the next 80-day cycle. Okay, so that peak, so there was a difference there, okay. And what was that difference? Well, the difference is that the shape that developed in the Australian market is a bearish-shaped cycle. Remember, I was pointing out to you that that peak of that cycle occurred very early, so that was a bearish-shaped cycle. Okay, it meant that the 40-week cycle that was beginning to develop started exhibiting signs of having a bearish shape, and it started doing that very early on. Way back, much earlier this year, or at the end of last year, we were already saying this 40-week cycle is beginning to show signs of having a very bearish shape. Okay, so that doesn't look very good for the current 40-week cycle, which means that we could be looking for quite a lot of downside movement in the 40-week cycle. So that is the one difference that played out in the differences between Australia and America. Now, what is the other difference? Well, the other difference is that this second peak, the second peak in the M shape, is now confirmed in the US markets, and it was confirmed as happening at the end of March. How can I say it's confirmed? How do we confirm peaks and troughs using cyclic theory? Well, we take a look at where price crosses VTLs or FLDs. And if I zoom in just a little bit, you can see here very clearly, and the best way of looking at this is to plot a line on median chart. You can see that this line, the price line, plunged through the 20-week VTL over there, and it did that in the first week of April. And if you have been reading ST Outlook, and I see some of you have, if you've been reading ST Outlook, I pointed it out in ST Outlook. It was a very big moment in the markets, or it was a very big moment for Hurst analysts. Hurst analysts get very excited when price crosses through VTLs and FLDs. It sounds like we have a boring life, but it's not necessarily true. When price plunged through that 20-week VTL in the first week of April, it was a very important moment because it told us that the current 40-week cycle has had a confirmed peak. What peak is it? That's really easy. You just go back and you have a look and you can see the peak. It was the peak that happened in towards the end of March. Okay? So by price crossing below that VTL, we know that the 40-week cycle that is playing out in the American markets has experienced its peak, and it's pretty much downhill from here. I must reiterate that, that of course, prices don't move in a straight line. What often happens with friends of mine who trade the markets and haven't yet seen the Hurst light, and they like to argue about my analyses with me. I will say, well, it's all downhill from here, and they'll phone me back. They'll phone me up a week or two later and say, oh, but the market's been moving up for a week. I have to remind them that because a market has formed a peak and is moving down to a trough does not mean it's going to keep moving down all the way. In fact, the market, of course, as you probably know, is experiencing a bit of a bounce at the moment, which is a bounce that was completely expected in Hurst cyclic terms. So the American market at the moment, what is happening is that the 40-week cycle peak has been confirmed, and prices are heading down towards that 40-week cycle trough. Of course, there will be bounces and there'll be ups and downs on the way. And I see a question from Jitendra. Based on this theory, we should not see the 1420 level breached in the current bounce. Yes, absolutely. Based on this, we should not see the 1420 level breached, exactly, because the 1420 level was the peak, which has now been confirmed by the crossing of that 20-week VTL. Now, I must put out a few disclaimers. The first disclaimer is that the price crossing of a VTL should always be taken with a little pinch of salt. Why? Because VTLs are notoriously difficult, and they're not as reliable as an FLD. Okay? If this analysis changes for any reason, if new price information comes in and we realize that we have to change the analysis, then this VTL will disappear from the chart because the analysis has changed. Therefore, that VTL cross will prove to be irrelevant, and price could move up to a higher level. Okay, so that's the disclaimer. That's the pinch of salt that you have to take. I think it's very unlikely that this analysis is going to prove wrong and change to such an extent. So that's the first thing I should say about it. The other thing that's worth pointing out is that FLDs are much more reliable, and there is the 20-week FLD, and as you can see, price is very close to crossing that 20-week FLD. It has tantalizingly not quite crossed that FLD yet, which means that the FLD confirmation, which is the more convincing confirmation, it's the harder proof, if you like, hasn't been delivered yet. So, in fact, it could turn out to be an early call, but I still believe that is unlikely. We have to wait until price crosses the 20-week FLD before we are absolutely 100% convinced. However, something interesting has developed, and that is that price has crossed, and let me zoom in a little bit, price has crossed the 80-day FLD. Now, trading using Hurst cyclic principles is a constant matter of collecting evidence of all the different cycles and so on and so forth. So, I see another question from Jitendra. I'll get there in a moment. Let me finish this train of thought quickly. Price crossed in the American markets. Price crossed the 80-day FLD in the looks like 16th of April. Price crossed the 80-day FLD, which means what? Because price crossed the 80-day FLD, it means that we have seen the peak of the current 80-day cycle. Okay. Now that means that this peak over here is confirmed as the highest peak that we're going to see in the current 80-day cycle, which is going to be forming a trough in mid-May. Okay. It doesn't, however, confirm that that is a peak of the current 20-week or 40-week cycle. Okay. Jitendra says, what level is that for the 20-week FLD crossover? Okay, let's have a look at that 20-week FLD. If I plot the 20-week FLD 20-week, there we go. And if I double-click there, then you will see that I haven't updated my American data. So this is yesterday. That FLD was at 1363. Price, of course, stayed above it yesterday. Price bounced up yesterday. For today, that price is 20-week FLD 1362, and so on. You can see the level of that. It's sort of meandering around there. It looks as if though price might in fact stay above that FLD and only cross down through it in the second week of May. Okay. So let's go back and take a look at the, let me just zoom back out again, and let me now relate what I've been speaking about here with the US markets back to what's happening in the Australian markets. There is one other small point that I should raise about identifying the peak of the 40-week cycle. Those of you who are familiar with Elliott wave principles will know that Elliott wave has absolutely hard and fast rules, and so a wave 2 in price cannot carry price below the start of a wave 1, for instance. Okay, that's an absolute hard and fast rule. Hurst's cyclic principles are not absolutely hard and fast in that way, and it is possible